Hello there, and welcome to the look ahead for Wednesday, the 3rd of July, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, overnight, we've got data from Australia to be watching out for, retail sales, and also the services PMIs. Also, got the Chinese cakes and services PMI. In the European session, you've got Eurozone PMIs as well as the PPI, and ECB Chief Economist Philip Lane will speak. UK services PMI, and then in the US session, we've also got ADP payrolls, jobless claims, and the ISM services PMI. So all in all, I think it's fair to say it's a pretty busy day tomorrow. I'm going to start with what's going on in the US, what we'll be watching out for, because we've obviously had Federal Reserve Chair Jerome Powell speak today. And, you know, he pulled out the dovish stance, saying that they've really seen some progress as far as cooling inflation is concerned. But unfortunately, his comments have been backed or offset, should I say, by the much stronger than expected JOLTS job openings data, which sort of offset those dovish remarks. And suggested actually perhaps there aren't that many cracks appearing in the US labor market at all. So, you know what, tomorrow focus very much going to be, I think, on the jobless claims and the ADP payrolls. ADP payrolls are expected to come in at 156,000, up from 152,000. Jobless claims I'll be watching, not so much the initial jobless claims, although they're supposed to sort of come in at 235k, more or less in line with what they were last week, but actually with the continuous claims, which rose to a 3-year high, which suggested that actually the number of Americans out of work looking to get back into work, getting benefits for unemployment actually rose to the highest level it's been for some time. Also, we've got ISM services PMI, so much data coming through. That's expected to just ease slightly to 52.5 from 53.8. That's the sort of easing that the Federal Reserve will probably want to see. Still seeing some growth, but just at a slower pace. Now, this is the gold chart that we're looking at here. Obviously, there hasn't been too much movement on the back of those comments from Federal Reserve Chair Jerome Powell and the JOLTS jobs openings, as they've been offsetting each other. But if we have a look here, it's been trading below this falling trend line from that all-time high reached in mid-May. It's also been in a relatively I would say range-bound setting as well. We've got sort of a level on the downside to watch out for. Near term would be 2300, and just below that the 2280. So basically, if we get any sense of strong data coming through from the US, then that could send US dollar higher, could also pull gold lower as the market sort of pushes back further on rate cut expectations. But actually, you know, in light of those comments from Federal Reserve Chair Jerome Powell today, if we do get a sense of weakening data, weaker jobless claims, weaker ADP payrolls, then I think that could actually really spur a strong move higher in gold, potentially breaking above the 50 SMA, which is capping at the moment, and that falling trend line as it heads towards 2360. That's the last week's high, and then on to the 2388 level, which was that early June high, or the June high. On the downside, as I said, watch out for 2300 and 2288. If you get below that, then the 2280 is on the downside. So just what else we'll be watching? Let's just have a quick look at the US equity markets as we move into that data. Now, this is the Dow Jones. As you can see, I think we're very much trading range bound as well, as we have for the past 2 weeks here, capped on the upside by 39,600. Capped on the lower side by the 100 SMA, which has just been guiding the price modestly higher, but just protecting the downside there at 38,850. So if we get, I said, any sense of weaker data from the figures tomorrow, then we could see that lifting September rate cut expectations further. They were already relatively high heading into Federal Reserve Chair Jerome Powell's speech, but they have pushed higher since. So yeah, look for a breakout on the upside above the 39,600, which was last week's high. That could then open the door to the 40,000 level. On the downside, as I said, a break below that 100 SMA is needed before we can really test the 38,500. This is a level which has been important a couple of times across the past few months. Below there, then we get the 38,000, which is that late May low coming into focus. So now let's just have a quick look at other assets that we could be watching. I'm just going to have a look now at the German DAX, because as I said, we've got that data coming in from the Eurozone. You've got the services sector PMI and also the composite PMI. We're expecting them both to show some weakening and sort of slower growth. This comes after the manufacturing PMI was also actually showed a deeper contraction than expected. So we are actually, after that sort of signs of an improving picture in the Eurozone economy and the German economy, we're actually seeing things starting to show signs of struggling again. Now, as we can see, this is the DAX. We have the DAX being guided higher by the 100 SMA and the 50 SMA, but it is, again, it's not really making any great moves here. Buyer's going to be looking for a move over 18,365. That's the 50 SMA to bring the 18,650. That's the April high into focus, and beyond there, the all-time high of 18,915. We're going to get a move higher if we get a sense of weaker data that could encourage the ECB to cut rates sooner. But to be honest, the comments that we've had from the ECB, Christine Lagarde, just today and yesterday, suggest that the ECB isn't necessarily in a rush to make the next move to cut rates, although we did see that inflation data today cooled to 2.5%, so it's resuming that downtrend after accelerating in May. Service sector inflation still proving to be a bit of a problem. On the downside, we're just trying to test that 100 SMA right now at around the 18,000. If we can get below a break below 18,000, then that's going to bring 17,800, which is the May low, into focus. And if we get sort of any sense, I think, of strong data or more comments from ECB economist Philip Lane that potentially the ECB is not looking to cut soon, then that could have a negative impact on the DAX. I think the market is still expecting the ECB to cut rates twice more this year. Okay, and we'll just have a quick look at sterling US dollar. Obviously, we've got the elections coming up shortly on Thursday. We've also got tomorrow we've got the services PMI data, which is expected to show that the service sector is the dominant sector in the UK. Grew at a slightly slower pace in June, growing at 51.2 versus 52.9 previously. Now, if we have a look at the chart here, we can see that the sort of sterling US dollar has fallen out of that uptrend that it had been trading in across May and the start of June. It's now just trading caught again in a relatively range-bound situation between 127 on the upside and 126 on the downside. And we've got this sort of test of the Bank of England are sort of weighing up when to cut interest rates. Obviously, signs that the UK economy is starting to perhaps slow a little bit might make that August rate cut more of a reality. We had inflation data, grocery inflation data from the UK in today, and that actually suggested that the UK economy saw grocery inflation rise at its slowest pace in almost 3 years. So that, again, good signs for expectations of a rate cut in August, which is sitting at around a 60% probability right now. If we get weak data, weaker than expected data, especially look out for services input prices, given that we've got that sticky service sector inflation. Looking to take out the 126, and that will expose the 200 SMA at 125.60. On the upside, stronger than expected data will make an August rate cut less likely. Look for a rise above that 127, and that's going to bring 128 in on the upside. So excellent. I hope you liked what you've seen. And if you have, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.